Well, hello everyone, and welcome to another Southern California market update in real estate. My name is Stephen Meade. I'm with Domicile real estate for people who love houses. And this is our Southern California whole market update for Los Angeles and Orange counties. And this is our last one of these for this year. So it's December 20th today when we're releasing this and recording it. And kind of some interesting things in the stats and also some things that maybe we didn't even look at. We've kind of not paid attention to some things that have kind of snuck up a little bit that I think are pretty interesting. So I don't want to talk about what I'm going to tell you. Let's just go ahead and dive into it. I know everyone's got a busy week this week with the holidays coming up, but let's start off and look at total active listings. This is actually not a surprising one, right? If you look at typically what happens is as we head into the end of the year, basically that inventory reaches a bottom and then it starts growing again into the new year. So it's not that unusual to see this downward slope. Now, what I think is kind of interesting is let's go ahead and compare to last year, right? Because we have more inventory on our market, but the question is, do we really have that much more inventory than we had last year? So in our under $1 million category, right? So this is just the total number of listings that are under $1 million in Los Angeles and Orange counties combined. So what do we have here? So if you look at where our total inventories are, we're probably at around 6,500 units for sale right now active. And if we look back to 2021, around this time in 2021, where were we? We were probably right around 3,600. So not quite doubled, right? If we are at 6,000 or so here, 6,200 maybe, or actually 6,500 versus, right around 3,500. Not exactly a doubling, but still a decent growth. If we look here in our $1 to $2 million category, now remember, we've seen some growth in this range merely because prices have moved upward. But as prices have gone back to where they were, this is a much more comparable scale. But I'm not just interested in looking at these categories versus where they were last year, but also the totals. So where are we at right now in 2022? Well, right now we're probably right around 3,000 units here in as of today in that 1 to 2 million category. Where were we? Probably right around 1,500, maybe closer to 2,000 units down here. So again, about the same relationship in terms of where we are. Now, if we look at this, if we were here and we were right around 6,500, and we add up, our 3,000, or maybe even it's a little bit less than that, that puts us at 9,500 units total. Where were we last year? If we were around 3,400, 3,500 units, or actually, probably around 35, maybe even 3,600 units, plus this number back here, which I think we were calling 1,500, 2,000 units, we are right about double the inventory level that we were last year. Believe it or not, this is actually not that big of a change. If we look at where we were in 2008, for example, versus kind of those inventory numbers, inventory grew quite a bit more. Also, the slope on these curves is fairly down. So I think the way to look at this is, yes, demand has absolutely been down, but it has not changed that supply-demand relationship maybe quite as much as I think some people thought it would. I think they thought we would end this year just swimming in inventory, and that's really not where we are. Now, if we look at our new listings in the last 2 weeks, I think this one's kind of interesting because you see these numbers took a dive and they sort of hit a floor. That is different than last year, where that number of new listings continued downward. So I'm a little surprised by this. We're the week before Christmas, right? This is not the time when most people are putting homes in the market. And we saw this skid kind of stop, and actually even a slight increase over the last 2 weeks in terms of new inventory under $1 million. Kind of curious about that. Is that a blip, or is that going to be a trend that we see continuing? Did we in fact hit our low inventory levels for the year? if you look back here, you see that we actually still dropped a little bit well into the new year. So I'm really curious what our next update is going to bring. That'll be around the same time next year. Now, if we look at our new escrows, this is the one that really surprises me. We are we are days away from the Christmas holiday, and more or less about 10 days away from New Year's. And look at these numbers. The number of new escrows went up. That is very, very unusual. In fact, and if you look back here, I mean, this is the shape of that curve, right? Last year, I mean, we bottomed out in that at the end of the first week in January, and here it looks like we bottomed out early. And again, I'm curious to see, is this just a blip and we're going to see this was just a bump, an anomaly, or we're going to see these numbers rise and that we actually hit our lowest point earlier. Now, I have a little bit of a theory on that. I'm going to get to that in a second. And of course, what happens when your new listings are flat and your new escrows go up? Your absorption rate climbs through the roof, right? We are hitting almost, or we're over 100% for under $1 million, and we're just under 100% in our 1 to 2 million category. Now, to be honest, that is not that unusual from last year. There's kind of this weird effect that happens around holidays towards the end of the year. We find that sellers are a lot more likely to go dormant than buyers are. And that's just kind of an effect that seems to happen, and it jumps this absorption rate just like this. But I mean, it's interesting to see that even in this year, a year that I think a lot of people have been talking about, the headline in the street is that the brakes have been pushed on the real estate market. And to a large degree, that's true, but it's not true in the way that you think. And I'm going to take a minute here to talk about something that's a bit of a pet peeve of mine. People ask this question all the time: how is the real estate market? And that's a very vague question, because there's really two things that somebody can be talking about. The first thing is, how are the prices in the real estate market, right? What is going on with the prices of the real estate market? That's one way to say, how is the real estate market? But the other is the number of transactions taking place. And what we're seeing in this market is that the pricing has had maybe a slight downward drop overall in our market, not huge drops. In fact, the initial drops were maybe decent size, and then things have just kind of really been on maybe a slight downward slope. But the number of sales, that's where the brakes have been slammed, right? So when people ask you, how is the market doing? You really need to understand, is it the number of transactions, or is it the prices that we're talking about? So if you look at our prices, this really kind of tells the story here. And just as a reminder for everyone, we've divided our market into 3 segments, right, to track, because I think it's important to understand that these markets operate differently. And I'm gonna talk to you a little bit about the reason why. And the mix is, who are the buyers in these price ranges? This 75th percentile buyer is a bit unique. The 2 key attributes that you need to understand about this price range is, A, these people tend to have much bigger down payments and they are getting smaller loans. That is important to understand, because that means they might be a little less sensitive to interest rates. This middle market, this median price market right here, just under $1 million, kind of at its peak, this is a tough price range. These are move-up buyers who usually have enough money for a 20% down payment, but they are not big down payments. And the reason why this matters is, if this person was sitting on a house at a 3% mortgage and they want to upgrade that to a larger home, the cost for doing that isn't just the jump in house price, it's trading in that 3% mortgage for something that is going to be a bit higher. And this range is very tough if you are not an attractive house, meaning unless you've got a great reason or you are attractive to affluent first-time home buyers, you're going to have a tough time. Now, this entry-level market, this is primarily, right, first-time home buyers. These are not people coming from another home. However, while these buyers are very interest rate sensitive because of that, they're not trading in, they're not giving up a super low interest rate to get a house. So for them, they feel the pain on the buy side, but they don't feel the pain of giving up a low rate mortgage on their old home like these median level buyers tend to. So what have we seen happen in the last 2 weeks? Well, we've seen maybe a slight drop up here, a slight rise, right, in that median price point, and a slight rise in our 25th percentile. Remember, these numbers are 4 to 6 weeks old. They are based on contracts that were negotiated 4 to 6 weeks ago. And these are kind of some of the first numbers that really reflect those lower interest rates, right, that we started to see. And I think that might be where this rise is coming from. And again, I also think that might be the reason that we are seeing for the number of escrows going up before Christmas. I think some buyers are saying, hey, let's not waste this opportunity. Rates could go back up again in January. Let's go ahead and make a move now because we know exactly what we're getting. And all the sellers around this time of year tend to be more desperate, or at least that's the perception. I think there's definitely some truth to that. So that's kind of where we're looking at prices, right? In California Association of Realtors released their numbers saying that for the month of November, we are finally at a point where we are slightly less year over year in prices in California as a whole. And I think these graphs kind of are not too far off from that, right? We are about the same, maybe slightly lower here. We are about the same, as you can see here, and we are about the same here, maybe slightly lower. So I think that kind of corresponds to what we're seeing in our LA and Orange County markets on the statewide numbers as a whole. Still active after 14 days. This is an interesting one. We saw this number climb. It leveled out, and now it is dropping. What does this mean? It means that these homes that just came on the market, the fresh inventory, more and more buyers are tending to go to those. If we look at our close to list ratio, remember back in those days when the average home, $1 to $2 million, was closing over 106% over list price? Yes, that was April. And do you remember when our under 1 million, we were closing over 104% of list price? We saw these numbers really kind of take a dive. They again leveled out, and now they're kind of hovering in this 98 to 99% level. That is actually what we call a normal market. And if we look at our days on market for new contracts, so you can see that number tends to be a little higher towards the end of the year. It is swung up here towards almost to 50 days. It looks like it's leveling out on our 1 to 2 million. We'll have to see if that's going to level out on this under 1 million category or not. My theory is that it will level out. And then my personal favorite graph, I love this one. And there's a couple things that we need to talk about here this week. There's some things that are unique and interesting, right? A big one here is as mortgage rates have eased further, we have seen this payment index number go down. Now, what I think is interesting about that is looking at, where are we, right? Like the number we're at corresponds back to kind of the beginning of April. And the reality is this number is within this range that we have seen all the way since April. So the fact is, while the perception among consumers, right, is this just wildly variable market where they don't know what end is up, for the most part, we've been in this pocket, right, where the payment on a median priced home has been about 50% higher than it was in June of 2018. And we really haven't varied a huge amount from there. June of 2018, we are 4.5, approaching 5 years since that number. Is it right that homes have gone up, that the payment has gone up 50% since that point? That is, like an 8% increase per year. That's a lot. If we look at inflation, right, what has inflation done since that time period? Well, it's right about 120% higher than it was in June of 2018. So that's our overall market. But let's take a look here at something that I personally find fascinating, and that is look at what's happened to our rent index, right? It jumped up, it was steady, and it's seen some declines, right? Like we've seen a downward slope on this. Now, what I find fascinating about that is we're not very far off from inflation here. If you look at these numbers, rents have always been a little bit above, they've grown a little bit faster. We're not. What this tells me when I see this is that the cost, at least of rental housing, is not completely out of line with inflation. So as much as tenants' rights groups and a lot of these people are really complaining about rents, the fact is the data says that rents have not actually moved that much more than inflation if you are talking about rents on single family homes, on the median single family home. Apartments, I'd imagine, might be a little bit of a different story. So that's kind of struck me as interesting. The other thing I want to talk about is this gap. And we've talked a lot about this gap, right? This gap is the thing that can have a gap, but not for a huge period of time. And the reason why that can't exist for a long period of time is that this is kind of this rent versus buy sort of analysis. And right now, renting is comparatively a better deal than it has been, right? But the question is, this number is on the rise a little bit. Are we going to see these come closer together again? Are we going to see rents come up to meet this? Or is it possible we're going to see this blue line come downward? And my theory is that we're actually going to see the rents rise. And the reason why I think that is because of some of these other big effects, right, that we've seen elsewhere. I see a market where, our percent still active are for 14 days. That number is going down. That means increased competition. Our pricing is fairly flat. Our absorption rate is higher. We're seeing new escrows jump up. I just see a lot of things pointing to kind of a sense of market resilience. I don't know if we're in an untenable situation on the buy side. And what I think that's going to mean is I think we're going to see a little bit of this rental market come back up. I'm curious if we're going to see that or not. We're also not that far out of line from inflation. This number has a little bit of room to come up a little bit. The other thing, and I've talked about this a couple times, is this payment index is based on a 30-year fixed rate loan. When rates go up like they are now, the percentage of loans that are adjustable rate mortgages at lower interest rates is higher. So I wonder if this payment index is entirely accurate based on that changing consumer behavior, right? That's kind of that wiggle room. That means in reality, this payment number might actually be a little bit lower than it's indicated. So, this gap is still a little bit bigger than I'd like. I feel like it should be more in the zone here, but I'm very curious to see how the market is going to reconcile that in the coming month. And then obviously, if we look at our prevailing mortgage rates here, we saw rates rise. They were in this 5 to 6 for a while. Then they just went on this unprecedented run, kissed 7%, and now they've been coming down. The reality is we've got several lenders that are telling me that they can do on conforming high balance loans that they can actually hit under 6% with 1 point. I think that we're in a spot that isn't terrible as far as interest rates go at the moment. Well, happy holidays, everyone. Happy New Year. Our next update, our whole market update, will be after the new year. So I'm excited to see you guys into 2023. Questions and comments, as always, we love those. Do not forget to like, subscribe, and hit the notification bell. And of course, if you are looking to buy or sell a home in Southern California, specifically Los Angeles and Orange counties, we would love to help you out with that. Don't hesitate to reach out to us. We'll see you again real soon.